Hello, everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be taking a look at the stock market for March 19th through the 23rd. So we had quite a bit going on this week, much worse than I thought it was going to be, just because we had the Fed rates. The Fed chairman discussed interest rate increases, which we knew was going to take place. And then for some reason, the stock market, came down because we already knew what he was going to talk about and what he said, but it still went down. And then Friday's talk with tariffs. So we're going to quickly cover on Facebook what we kind of covered for the week, cover the three indexes, take a look at some stock market data as far as what stocks I was kind of looking at this week. One of them, MU, Facebook, Apple. Let's see, there's a couple other ones out there. Not too much time on them. Take a look at what Trump had said last year about China, what the current plan is as far as tariffs go, and what could end up coming up in the next few weeks, kind of going in. And then we'll end it with some of the Merrill Edge's weekly recap of what kind of went on this week to see what we missed this week. I always like to kind of do that. Of course, I like to do these weekly recaps for historical references, because on my playlist I can go there, click on my weekly recaps, take a look at the screenshot, and I can say we had a positive week. Like 3 weeks ago now, we had a positive week where all the indexes went up 2 or 3 points. The last 2 weeks have been negative, so this week was definitely the worst. 5 points down, I believe, the S&P 500, Dow Jones, and 6 points on the NASDAQ. So very, very rough week. I'm getting more involved over on real estate, connecting with a lot of local investors. So I'm meeting up with a local investor who's, he does a lot of flips and also has some investment properties, talking to a few others that do a lot of community services as far as buying rundown houses in some of the harder part of the cities and turning them into rental investments for, those that need housing. So really going out there and connecting with the local community. I'm going to an event next Friday, which will go over covering house inspections, and then I have a Saturday event which will be going and talking about how to flip houses and how to get into real estate. It's just a seminar that's taking place. It's completely free, so I'll be going to those. So over on Facebook, let's go ahead and check it out. So I didn't post a whole lot this week. There was so much kind of going on, and I was just kind of keeping track of a little bit of all of it here. As far as stock market goes, I was watching the market a little bit. I knew it was going to be a rough week, so I did sell at the peak before it kind of crashing down on Wednesday, and then kind of continuing to go down into Thursday, Friday. So I've actually made a couple offers on some 3-bedroom houses, on 3 houses that are 3 bedrooms, 1 baths. 0 have been accepted so far. I'm still kind of waiting back to hear if they're going to answer my questions. I look at a property. I have like a couple questions that I like to ask anyways, kind of going on from there. Wednesday posted Bloomberg article, or the channel, because it was going to go live. We were waiting 10 minutes until the chairman, so this was actually 7 minutes until the chairman was going to be discussing, the interest rate hikes, and then all the news reporters kind of piled on and asking them questions. And right off the bat, the stock market dipped from, it lost $4 just in a matter of 30 minutes. And this actually continued down. This is just a 30-minute time span. This actually continued down to nearly down 6% of that day, and then continued an additional 6% going into Friday. So this one stock I was watching, I sold off at 167. It's now in the 150s. So I'm glad I sold out of that position, and I think I bought a little bit back in, but I believe kind of just holding on to that. So posted that the NASDAQ, you poor thing. NASDAQ got beat up the most this week. The NASDAQ alone went down more than, 6 points, so 6.31% for the week. I posted that over there on Facebook, and of course, it was a nightmare. And of course, Dropbox did really well. It IPO'd on Friday. Everyone was jumping onto that. I believe it jumped up $3 or so and went up roughly 30%. So very nice. Apple, it has actually dipped. I said it reached 164. It actually came down, and it's sitting right now at 164. This is one that I was watching. So I believe Apple is at 164 and some change. Just to quickly take a look here. What is going on? Gotta click on this, and there it is. So yeah, 164.94. Going into next week, I have an article here talking about a little bit about Facebook. I think it'll actually dip down. I don't know if it'll hit the 150s, but I'm actually still heavily invested in Apple. It's my primary stock right now, and it's such a great long-term buy and hold stock. Especially for my IRA, which I'm not going to be taking any money out of my IRA. I might consolidate my Roth IRA into one or two stocks, being Apple and possibly Amazon. Just kind of because those are long term. Those are long term accounts. My money inside my cash managed account, that'll more than likely get withdrawn. I also have money in savings, so I'll put those towards mortgages on some other properties. I've been talking to a couple of investors about my plan. I like to purchase two houses with just cash buys, and then finance, two or three of them with loans with a cash flow of $200 on the mortgaged ones that are financed, and then roughly $1,600 of just gross income. So right around $900 of net income on my two cash purchases, and then $600 of net income on my three finance properties. So total in a year or two, I would like to be sitting with 5 properties, just collecting income and then applying that towards another house. So he's actually one of the investors I've talked to. He's working on a project here in a local city and asking if I'd like to team up with him. So I'll be getting involved in that. And that's about all I really posted over on Facebook this week. I guess I did make a couple videos. I didn't really share them over to Facebook, so I may end up doing that here very shortly. I've been reading these books like crazy. These are both two just sitting here on my desk. These are free on YouTube. I posted the links. I have a whole video section talking about free books over on YouTube. These are two of them that are free. I just really enjoyed listening to both of them that I had to buy them, go out to Amazon, buy them. So they're sitting here on my desk, and I've gone through there and made heavy notes on what my plan is, what I need to get in action in order to, and what I need to do. So very, very good books there. As far as the markets go, we talked a little bit about this. S&P 500 down 6 points over a 5-day period. This is such a rough market. AbbVie losing more than, I believe, like 15% this week. This is another one. This is one I was invested in. I sold this one off almost a month or so ago. It's near peak point. I was positive in this by, I believe, like 50 or 60%. And this came down pretty hard over the last month due to their cancer treatment that they were working on. It didn't provide any results, and it just didn't go well. So it definitely flew back. So cancer space roundups. There was some space stocks. We talked about it on our Friday video. And I know a lot of people that are invested in Triple M, invested in Caterpillar, invested in some of these stocks that are, they're going to be affected by the whole tariffs thing with China, and those are getting hit pretty hard right now. So overall, S&P 500 down nearly 6 points. AbbVie, we've already covered. Dow Jones here, right along the line with the S&P 500, down, a little over 5.5 points, 5.67% right there. Again, many of the similar stocks, Triple M, Apple. Apple was hit so hard this week. I think we've already covered it a little bit over the 5-day period, down 7.35. In my positions that I had bought at like 162 range, I'm only sitting up 1 or 2%, but I will end up purchasing more Apple because after this whole thing is done and over with, the whole tariff things, we knew President Trump was going to be enacting all this stuff. We knew what he was going to be doing. I don't know if we could win the whole trade war with China, just number-wise. I've looked at some of the numbers and kind of gone over what everyone's been kind of predicting. China is willing to outlast us, so they're definitely willing to do it if need be. So let's see here. What else? So we covered the S&P 500. Here's the NASDAQ. NASDAQ hit the hardest this week due to technology, taking the majority of the tariff talk. So President Trump's going to be primarily focused on hitting a lot of the technology stocks. Those will be the ones affected by the tariffs. And I was invested in the NASDAQ QQQ for the last 2 or so weeks, and Apple, so my portfolio bled out quite a bit. One of the commenters over on Facebook talking about, all my portfolio is red, it's just bleeding out, I'm a brand new investor. And when everyone's sort of bleeding out red, it's kind of normal to just stick in it, and just kind of either outlast it. You could sell off right now if you believe it's going to go down a little bit more and buy in a little bit cheaper, or you can just sort of hold out, or you can apply more money into those, to average down in your initial cost. And eventually, with time, everything recovers, especially if you're holding an index such as the NASDAQ or the S&P 500. Regardless of the short term, in the long term, it's always going to recover. So it just depends what your goals are. Right now, I'm not trying to stay in the stock market for the long term right now because I'd rather put my money into real estate here locally. So that's my plan right now that I have all kind of written and kind of getting in the works. But so this is an article back from November 2017 that Trump criticized the one-sided Chinese trade deal. So this is what kind of got it in his mind as far as what he wanted to kind of implement. And he kind of congratulated China in this whole thing. He says, I give China great credit. And here it is. So, speaking after the announcement of new business deals between U.S. and Chinese companies, Trump said the U.S. and China must immediately address the unfair trade practices that drive the trade deficit, along with barriers to market success, forced technology transfers, and intellectual property theft. But I don't blame China, he said. After all, who can blame a country for trying to take who can blame a country for being able to take advantage of another country for the benefit of its citizens? They're missing okay, yeah. So I do give China great credit. So, he applauded China on what they were trying to implement. And, the U.S. and China had signed agreements valued at more than $250 billion for products including U.S.-made jets. That's one of the airlines, like Boeing. I think even Boeing. I don't know if Boeing went up or down. That's not one I was tracking this week. Let's go. What is Boeing's ticker? Oh, there it is. I thought it was BA. I don't know why Barnes & Noble's popped up. So, 5-day change. Boeing is down 2.87. So, yeah, got some craziness. So this came out Friday. So Trump moves to crack down on China trade with a $60 billion in tariffs on imported products. So the products that were targeted were mainly technology industry. So it was the worst time to be holding a NASDAQ. It just felt horrible. President Trump took the first steps toward imposing tariffs on $60 billion in Chinese goods and limiting China's ability to invest in the U.S. technology industry Thursday, saying the moves were a response to Beijing's history of forcing U.S. companies to surrender their trade secrets to do business in China. So, yeah, that's going to be kind of going on. It kind of goes on to talk a little bit about the factories and jobs, and President Trump blamed China for the loss of these jobs and such. The U.S. has still had very nice growth. It's very hard to produce anything in the United States that's going to be cost effective. That's why everything is imported from China and done outside, especially it's so much stuff. But the article kind of goes on to talk a little bit more on that. So I'm going to have this article here if you guys are interested in that. I forgot to put my articles in my last video and I closed out of the link. So I'll have to look for those if you guys are interested in that. But as far as these, I'm going to go ahead and include both of these in the link in the description below. And I will do that. And trade war with China could hurt these U.S. businesses the most. Okay, so this was another really good article that I was taking a look at. So some of these stocks I hold here, Avery, I hold, and Apple, I believe, was on the list. But so trade wars with China could hurt these U.S. businesses the most because we were talking about technology just going to get hammered in this whole tariff business and the whole 60 billion on tariffs on imported goods. That's going to be hurting these companies here. So some of them are Skyworks Solutions, Qualcomm, Qorvo, Broadcom Limited, Micron Technologies, MU. This one's been taking a huge dive as well this week. Boy, they did not. I think they felt more pain than I did this week. If you were invested in stock heavily, down more than 10%. So down more than 10%. This is just in 5 days. So if we take a look at just a month here, okay, so they did really well over the month. So I don't feel bad for them at all, right? So Micron Texas Instruments Incorporated. It's a gun company, I believe, right here, the Smith Corporation. I think AO Smith Corporation is a gun company. Microchip Technology. So I'm not going to go ahead and read all these, but it kind of goes on from there. So all iPhones come out of China, and analysts at Counterpoint Research. So Apple is going to be getting here. Apple is exposed to China in several ways. It relies on China's factories for assembly. China has an effective lock on the rare earth minerals essential for Apple products. So Apple's revenue is, Greater China is 20%. So China is the biggest market to over 100 countries. It's hard to find another country with that kind of demand, if the US goes forward, you could see a blowback that could hurt companies and its workers. So there's several companies. I may actually just end up just removing myself. I can't say I'd remove myself because I'd never fully remove myself from the market. I would always be somehow invested. I have M1 Finance, my Merrill Edge, some little stocks over on Robinhood. I have my, what is that called? The thrift savings plan from the military. I kind of got that going on. I'm never going to remove myself completely out of the market. I even have my Roth 401k through my company. So I'll still be pretty well invested, but I do plan to take the majority of my money and just put it into real estate that, I could buy very cheap, fix up, and then keep for myself. And the after repair value would be very high. So, that's all something. I'd like to record some of these videos as I buy deals and stuff. I'd like to make some recordings on some of the rehab and process and stuff. So that's kind of going forward. Some of the things I've kind of written down as far as my plan. So let's see, is this an article? Yeah, so I'll go ahead and link this article in the description as well. So here we are. Our last area that we're going to be covering here is essentially, we already kind of covered a lot of what was discussed today. Some of the S&P 500 winners were Foot Locker, Newmont Mining, Lockheed Martin did pretty well this week. Overall, I believe they were positive for the week. LMT. Yeah, positive for the week at 1.48%. So their best day was Friday. See here, and the Raytheon. I know somebody else had mentioned this one. It's done really well. I'm not 100% sure what this company does, but of course I can just go over and read the stock story and really just know quite a bit about who what the company is, what they do, where they're at, and all sorts of other information, who their competitors are. So let's go take a look at the weekly wrap that Merrill Edge has provided, and then we can end it there. So equities dropped sharply this week, giving ground for the second week in a row as investors took in the latest policy directive from the Fed. So we knew that was going to go on Wednesday. A new round of tariffs from the White House on Friday. Cries for greater data regulation from Facebook, of course. Mark Zuckerberg, he apologized and was, the S&P 500, the Nasdaq Composite, the Dow Jones all dropped more than 5.7%. And the Nasdaq at 6.5%, which marks their worst week since the big sell-off in early February. Facebook kicked off the week by declining more than 7% due to their data leak of 50 million users. Investors turned their attention to the monetary policy on Wednesday, talking about the Federal Reserve's increasing interest rates by 25 basis points, which we already knew was going to take place. Some interest rates now, if you go out there and get a loan, you're going to be looking at a rate between 4.75 and 5%. So I work with lenders, and I talked to a couple of them about commercial loans, about standard loans. If you finance your home under your name as yourself, you're going to get a non-commercial loan. I can't think of the name right now. Just a standard loan. But if you're inside an LLC and you're trying to finance an LLC within an LLC, it's really hard. But you'll get like a percent higher. Hold on. Okay, so I am back. So the Feds are still looking to increase interest rates for two additional times in 2018, three times in 2019, and three times for 2020. So I think it actually says it here. So we thought that the central bank might raise in 2018 forecast to include four rate hikes. However, the Fed does anticipate it will need to be somewhat more aggressive in tightening policy over the next 2 years. So yeah, the Fed chairman discussed that they're more than likely going to be raising interest rates by 3 points in 2019, 3 points in 2020. So you're going to be looking at, in the next 2 years, a loan rate of around 7%. So all you guys that are out there trying to buy houses, trying to get in, trying to just get in and get a house, you should probably go and get focused on that right now, paying off your debt, and buy yourself a house. There's so much equity to be built inside of a house. So trade war fears came back into the mix on Thursday after President Trump signed a presidential memorandum that allows for tariffs of up to $60 billion worth of Chinese goods, mainly focused on technology, which we had covered. So China's alleged intellectual property theft against the U.S. tech companies prompted a retaliation response from China, which said it plans to levy duties up to $3 billion on U.S. imports, a drop in the bucket, considering the overall value of imported goods to China. So all 11 out of the 11 S&P sectors finished in the week in the negative territory. And energy, REITs, everything was down in my portfolio. The only stocks that were actually up that weren't that's not what I want to click on. Okay, so here's the changes for today as far as the sectors go. Now, what kind of has me worried as far as going on in the future right now is the financials. The financials have lost nearly 4%, 5% over the last 2 days. So you really need the financials to be positive for the market to do any sort of recovery. And right now there's been a really huge sell-off in the financial sector. So Wells Fargo, Bank of America, JP Morgan, Goldman Sachs, all these stocks have been doing very bad. So let's actually take a quick, we'll end it with that. So Goldman Sachs, GS. So Goldman Sachs down 8.35% this week. JPM. Why is it doing this? There we go. Come on. Down 7.3 points this week. Wells Fargo, what is the ticker symbol for that? There, see, CNN money, can't trust it. Wells Fargo down 8.8 points, so it just kind of goes on from there. So, I think the financials play a big part in determining where people believe that the market is heading right now. The financials and the technology sector, those are getting hammered the most, and that's what the S&P 500 really relies on. The financial sectors make up nearly 30%, I believe, of the S&P 500. Maybe this won't even tell me here, but the financial services typically make up 20 to 30% of total services. So I think it's closer to 30%. So when the financials don't do very well, that's 30% of the S&P 500. And then the other end is the technology sector. That's nearly another 30%. So together, the Institute suggested that retail banking, life insurance, property, and casualty insurance make up roughly 60% of the total financial sector sales. Okay, so that has nothing to do with what I was trying to make a dope point on. But basically, S&P 500 as a technology sector with the semiconductors and these big players like Apple, Google, and such, they don't do very well. Amazon, and the financial sector is not doing well. There's a lot of volatility there because those make up such a large portion of the market, and there's a lot of uncertainty right now. So I'm not sure how the next few weeks will go. If we're going to see any recovery next week, we may end up testing the previous lows of February. So let me know what you guys think is going to go on next week. and the week after. Do you guys see anything going on as far as next week goes? I haven't watched Bloomberg. Normally, I take a look at what's going on next week, but I haven't read into that or really looked into that right now. So that is primarily it for this video. So again, if you have enjoyed the video, remember to like, comment, and subscribe for future financial videos. If you have any questions about anything that was covered today, or if you would like to have anything discussed or just kind of talked about, you can just reach out to me or leave a comment in the comment section below. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided in these videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, trying to make some better, better stuff. Thanks for tuning in. I will see you next time. Have a great day. Bye.